Hey traders, checking in on the stock market today. Bears came out swinging and we had a pretty hard drop, breaking the pattern of a higher low every day that we've been watching in our major sectors and the S&P 500 itself. Is this the start of a bigger pullback or is this a dip for buying? Let's look at the clues that the charts are showing us from today's trading. So we can see here SPY had a gap up open, a pretty significant drop. It was the widest range in the S&P 500 that we've seen in the last 4 days, maybe the last 6 days, didn't do the math, but you get the idea. The range opened up a little bit. So what happened? We had all three of our major sectors, XLF, QQQ, and XLV, healthcare, all at the low of the day at the same time. That has not happened in a while, and as soon as that happens, we have our little light in our brain that flashes and says, okay, this time it's different. We then watched the low of yesterday break. That was checkmark number 2. Bears are showing up, and then we ended up seeing a bounce, and the bounce had follow through. It was a significant bounce off of the low. So here's our dump. We had 5-minute extreme oversold conditions, a very weak bounce attempt, another significant leg down. As soon as this 15 minutes of bounce followed through, we knew that was a big enough bounce for the bulls to be scouting a 5-minute trend change, and that 15-minute bounce shows us a lot of fear being alleviated. So this is one of those scenarios where if you've been watching these videos, I describe this action right here as the bears sucker punching the bulls. What do I mean? I mean the bulls are just cruising along for 7 days in a row, not a worry in the world, and then wham, out of nowhere, we drop fast and hard, completely shifting short-term momentum, but it's a sucker punch. The bears jumped out of the woods and punched the bulls in the mouth. The bulls collect their wits. They now know the bears are coming, and then we see the bulls control the rest of the day. It is notable to me when that happens and a bounce starts to take place and then we see another significant leg down, because that shows us the bulls getting sucker punched, collecting their wits, ready to fight, and then losing. What we see time and time again is sucker punch, ready to fight, bulls win. And that's what today was. Bulls won on this bounce. That being said, we are just looking for an hourly equilibrium on the futures chart into tonight's trading, where we've got our high, the all-time high, the low of the dump, the high of the bounce, and if we pull back tonight, we're going to be watching for an hourly higher low. So heading into tomorrow, I would love to see this be an equilibrium and still be in a tightening range, because that will give us some nice trading opportunity tomorrow where this tightening range would either break bullish and have us looking back to all-time highs, or break bearish and have us looking to the dump low. Bigger picture, we're just looking for daily higher lows. The bulls have plenty of space to work with. This could be a daily bull flag on the S&P 500. So these are dips for buying until we see days in a row of significant red flags. Most names didn't even see hourly oversold conditions. And if we look at the S&P 500, we did get to hourly oversold conditions. So again, backburner trade, first hourly oversold conditions coming off the all-time highs. Bulls bought that dip. If we were to break the low of this dump anytime this week, we've got 2 more trading days, it would be notable to me, because again, that's bears proving follow through. They got their sucker punch in, they don't have the follow through at this point. IWM started to pull back as well, lost the pattern of a higher low every day. Tons of space for a daily higher low to form. We're watching for the bulls to regain the hourly trend in their favor for a daily higher low to be set. So that means the bulls would need to hold 224.95 and break 228.71 tomorrow to regain the hourly uptrend. QQQ, same thing, big long lower wick, daily consolidation started. Again, it's notable because we took the action, I should say the bears took back 3 of the bullish days of action that, again, the bulls were just getting real tired, not doing a whole lot, no big green days, and then giving that back real quick, but the bounce was notable. Hourly, lower high, and we'll see if the overnight chart gives us the tightening hourly equilibrium. It's the kind of setup where I almost wish the day was longer, because we would be scouting hourly lower high bearish entries into the close, and we just ran out of time for the bears to get any notable follow through on that hourly lower high. Financial sector saved the day. Why? Did we break the low of yesterday? We did not. It was the strongest bounce as well. Let's just look at the 15-minute time frame. Here's our high of the day, low of the day. Look at the bounce retracement size. Again, we can use our Fibonacci tool and we can measure how significant was that bounce. If we want to compare sectors or see if it's a bear flag more likely or an equilibrium more likely, we bounced 70% plus. You look at QQQ on the 15-minute time frame, and that is a very different bounce. It was very clearly the financial sector taking charge for the bulls. We bounced to the 50% retracement as opposed to 70% retracement, which is a very big difference. That being said, XLF in after hours right now, let me make sure this, no, I take that back. It looked like we were down significantly in after hours, but, well, we did pull back into the end of the day. So it is a nice tightening hourly range here as well. Key support is 31.26, and we broke that right into the close, and then 31.15. Again, pattern of a higher low every single day. That is one check mark that the bears did not check off. They did not see the tech sector, financial sector, and healthcare sector all break their low of yesterday, which was a little bit of a clue. So that key level of 31.08 held, and now tomorrow we're going to be watching 31.15 to see if the pattern of a higher low every day breaks. If that happens, but we don't see any QQQ weakness, we know that it's just rotation going on again, keeping the broader market healthy. XLV had a gap up open and a pullback. It didn't break the low of yesterday, so it's still in a tightening daily equilibrium, and we actually broke resistance of 116.43. Still fairly sideways. We've been trading within this 3-day range for the last 9 days now. So 116.95 resistance, and anything over 114.62 would be a higher low. Still very range bound and just trading sideways over the last couple of weeks. Not a major factor overall. It's been the financial sector and the tech sector running the show. Consumer discretionary sector matters as well, XLY. But when I'm using QQQ here, QQQ is made up of majority tech sector, but consumer discretionary is the second largest holdings. So it's essentially me viewing both at once, both tech and consumer discretionary. Biotech sector, more significant pullback, daily consolidation underway. Again, same back burner trade, first hourly oversold conditions. And that's another reason why the sucker punch from the bears doesn't get a ton of follow through initially, because there are a lot of traders like myself and like others that know back burner trades that are buying those first hourly oversold conditions. Again, it's once that buying pressure is used up, do we drop to the lower low? Who's buying then? Not the back burner dip buyers. So low of the dump, hourly oversold, significant bounce. We bounced $6, about 3.5%. The leveraged ETFs were bouncing 8% plus. Hourly lower high is set at 171.20, and the bulls are looking for an hourly higher low compared to 165.52 to try and trade within this tightening range. Semiconductors, all-time high 246.79 on SMH, tested, came within $1 of it, 90 cents, and failed to break it. But we're in a daily uptrend with anything above 232.34 as a higher low. We would have to lose the daily uptrend to be more concerned with this double top at that all-time high. Solar sector failed to break 126 as well, saw some pullback. Same scenario as SMH. Anything above 113.40 is a daily higher low. We would have to lose the daily uptrend for the double top here to be more significant. MSOS, the USMJ ETF, record volume, big drop, but a V-shaped bounce. And right back up to that all-time high. Significant dip buying and a 5% plus bounce. Pattern of a higher low every day remaining intact. This one's been intact for 10 days now. So, just to summarize, the lows of today are very important for me tomorrow. If those levels break, then I'll say, all right, bears got some follow through, and we're going to still be watching for daily higher lows on a lot of individual names, but it will be more impressive than just a flash dump, complete V-shaped recovery, and back to looking at all-time highs. The VIX saw a big bull move up, but again did not hold it. Hourly equilibrium shaping up, low of 1970, high of 2390, looking for the higher low to form. 2160 is perhaps that higher low if we get a bit of follow through. Inverse to SPY, it's just the same hourly equilibrium shaping up. Daily time frame, indecision candle, and we know we're watching for a lower high compared to 37.5, even if we do get follow through. The dollar didn't do anything today, so this was not related to the dollar. It's a potential 4-hour bear flag, a weak bounce still, and we know that we're scouting a daily lower high, anything under 91.60 next time we bounce due to the size of this pullback. So dollar strength is evaporating. So that's not a factor here with the weakness that we saw today. Gold, watching for that daily lower high. Anything under 1875, the 4-hour time frame. A little bit of a double bottom, 1832, 1834. I guess I wouldn't call that a double bottom. It's still an uptrend at this point, but a base of support trying to hold. If those levels break, daily lower high is set, and it's then up to the bulls to hold the low and confirm a daily trend change to prove something to us, which they have been unable to do for the last 5 weeks. Silver, daily lower high is already set. So that's 27.81 new resistance now. Bulls must hold 25.90. If 25.90 breaks, we confirm a daily downtrend, and I will lighten up my longer term swing position in silver in my IRA if that level were to break. Why? Because a weekly bull break into a confirmed daily downtrend, that's a double top, and a double top into a confirmed daily downtrend definitely makes me a lot less comfortable as a bull. Miners, triple top the last 3 days for GDXJ, double bottom at the low of yesterday. So pretty much if you're playing off of yesterday's levels, there were some good trades in both directions. But we're watching this tightening range. Low, high, higher low, lower high, and we're scouting a higher low, anything above 48.28. And again, it would be ideal if that tightens up into next week, and the tighter the better, because that generally leads to better follow through in whatever direction the break occurs. Oil did not see weakness today. Higher low every single day pattern remaining intact. 4-hour uptrend remaining intact. So a non-factor for the market weakness that we saw today. So again, that's another little checkbox that the bears didn't have marked off. If we want full steam ahead for the bears, we want to see oil weakness. We want to see all major sectors at the low of the day at the same time. All of them breaking the low of the previous day. We want to see dollar strength. Didn't see that today. So a couple check boxes unmarked. Natural gas saw a significant bounce off the daily higher low. Clear base now 2736 and 2742, all about 310. Could this still be a head and shoulders? Yes, it's possible. It's a lot less likely due to the size of that bounce, but all about 310. And that is worth paying attention to still. There is a battle going on for the longer term trend change attempt. After the back test and hold of the EMA support, the EMAs are looking for this bull cross. Now we just need the price to confirm that trend change as well. Ended up trading APHA. Actually, I forget if I traded APHA or TLRY bearish today. Talked about it in the video yesterday. Again, just an extreme gap up open. And that was the short position that I was looking for. Huge pullback, but because the volatility is so insane, I was using smaller positions. So you look at that candle and you must think, wow, I must have nailed a home run. It was a couple day maker, and that's all I'm looking for. Consistency and wins on a daily basis. I'm not looking to be extra aggressive with where I stand, and it was a nice solid win looking short. That being said, there is some wild action going on in the Canadian MJ space. TLRY has got a bit of a gamma squeeze going on, and I'm going to make a video after this where I talk about that specifically. I hope you're well. Do good things. Not going to be around tomorrow. I think Jason will put out a market video, but I'll be back next week. No trading on Monday. Closed for the holidays. See you soon.